Is it a smart decision to borrow money to buy Bitcoin? In this video, I want to go into this in depth. Let's get started. I want to start with what the interest rate is. This is the amount a lender charges a borrower and is a percentage of the principal, the amount loaned. So if you borrow a certain amount of money, the lender is going to charge you a percentage of that to make up for the risk that they're taking by lending you money. The chances that maybe you won't pay them back, they have to account for that. They have to make sure that they don't get screwed over in this deal. If they're going to lend you money and you're going to do whatever you want with it, they want to be paid. They don't want to get screwed with you not paying them back. A smart way to look at this would be as the cost of bringing your future consumption to the present. So if you want to bring money that you would have maybe earned in the future to the present, how much will it cost you? If you can bring that money from the future to the present and you use it to buy an investment, maybe you can earn more than whatever the interest rate is. But keep in mind that these interest rates can compound over time. So if you don't make any payments on your loan, the balance is going to continue to grow forever until at some point you're not able to handle it. The growth is going to be more than whatever earnings you have. Thankfully, most lenders don't allow this to happen. Let's say for credit cards, there's a minimum payment. Usually, the amount that they make you pay as the minimum amount is enough to make sure that your credit card won't have to be paid off forever. They charge you a certain amount so that the principal amount keeps drawing down. So the interest rate is just a percentage that the lender charges you to compensate for the risk that they're taking by giving you the money right now rather than using it themselves. So they have to account for opportunity costs, they have to account for risks, they have to account for the potential of you not paying them back. So now that you know what that is, let's go into the numbers of what it would look like if you were to borrow money to buy Bitcoin. So let's say in this first example, so we'll go 3 examples here. The first example will say that you put in $10,000 and your bank puts in another $10,000. So you take $10,000 from your bank and you buy Bitcoin with that amount of money. The interest rate that your bank is going to charge you in this scenario is 10%. So they're going to charge you 10% per year. You're not going to pay them back anything. You're not going to make any interest payments. You're not going to make any minimum payments. It's just going to keep compounding and compounding. So 10% per year, and you're going to hold for 4 years. In this first scenario, so you can see I have a couple different scenarios. In the first scenario, you have a drop, you have a rise to 150,000 4 years from now. In the second scenario, you have a drop to 84,000. In the third scenario, I'll show it to you. I think it's an increase to 550,000. So let's go through that first scenario here. So your interest rate is 4%. You hold for 4 years. The beginning price of Bitcoin is $118,000. The end price is $150,000. And this is what you end up with. So your portfolio value, including what you borrowed, is going to be 25,000. The loan that you owe to your bank, the amount that you owe to your bank, principal plus interest. Principal is the amount that you borrowed. The interest is just what they charged you for letting you borrow that money. And then you have your principal investment, which is this amount of money here. So your money. The total profit that you would have is $782. $782.73. In this case, your percentage return after you account for the interest, the $4,641 in interest that you would pay, plus the loan that you would have to pay back, your total return would be 7.83%. In this case, Bitcoin would have returned about 6% per year. So it would be one of the worst 4 year periods ever. I mean, who knows if that could happen, if that could possibly happen in the future. I mean, I don't know if that could possibly happen in the next 4 years. I can't tell what the future is going to look like. I personally think that it's not going to be like this. I think the return will be much higher. So your total profit at the end of this would be $782.73. So your total profit would be 7.83%. So in this case, because the interest rate is higher than Bitcoin's return, you would have lost money by borrowing money to buy Bitcoin because you would have basically given part of your returns to the bank. So your bank is asking you to give them a share of your returns. You chose an investment that gave you a lower return than the interest rate that you paid to your bank. You would have made way more than 1.83% per year. You would have made 6% if you didn't borrow this money. But because you borrowed it, it brings your total return down. So you basically got a negative return because of the loan, because the loan would have cost you more than the return on Bitcoin. So let me just show you what that would look like if you didn't borrow money. So $10,000 of your own, you put in that $10,000, your interest rate is going to be 10%, 4 years again, 118,000 to 150,000. Your portfolio value would be $12,711.86. Your total profit would be $2,711.86. Your total return would be 27.12%. Now keep in mind, this is probably going to be this estimate would be lower than the stock market. So I don't think this is going to happen. The total return that you'll see here is 6.18% per year. So that makes sense because I was mentioning that up here 6%. So your total return would be 6%, meaning that you would have outperformed if you didn't borrow money. So in this case, if you want to borrow money, I think it's all about trying to time the market. I don't personally think that you should borrow money to buy Bitcoin during a bull market. I think it would be smarter to borrow during a bear market. But for all we know, maybe Bitcoin doesn't experience the same bear markets that we have in the past. And borrowing money now may be a smart decision, but you have to run the numbers yourself. You have to think about it yourself. Where do you think Bitcoin could go? Do you think Bitcoin could go to $1 million a cycle? If you think it could, then it would be a smart decision. But I can't tell you. I don't know. I have no idea where Bitcoin is going to go. If Bitcoin was at 15,000, it would have been more likely that it would go up compared to right now. Keep in mind, it's already up 8x from the bottom. It would have been a lot smarter to take a loan at the bottom of the bear market, but hindsight is always 2020. You don't know what's going to happen in the future based on what happened in the past. So let's take a look at this second scenario here, which would give you a much worse result. So we'll go from $118,000 Bitcoin to $84,000 Bitcoin. Your total portfolio, keep in mind in the first one, your total portfolio was worth $25,423. In the second one, it's only worth $14,237 because Bitcoin would have lost a significant amount of value. So your total portfolio return would be negative. You would have lost money. You would have owed money on top of the money that you put in if you sell your Bitcoin. So it doesn't really matter if you lost money on the investment. Your bank doesn't care. Your bank is still going to take that money from you. It's still going to take your $4,641 in interest. I think it's smart to borrow money to buy Bitcoin if you can get low interest rates. If you can get a 4% interest rate in this same scenario, your loss would be not the entire portfolio. You'd still have some money left over. But let's say in this scenario, it's 4%, your interest rate, your total return would be 37.25%. This would be about an 8.3% return per year. So if the interest rate was lower, that would mean that you would outperform not borrowing money to buy Bitcoin. But if the interest rate's higher, then you actually lose money by borrowing money to buy Bitcoin. So in this second scenario, you would have lost a significant amount of money if you had a 10% interest rate, you borrowed $10,000 and Bitcoin's price goes from 118,000 to 84,000. I think the chances of that are extremely low. I don't think that's going to happen. Over a decade that Bitcoin has been around, there's never been a 4-year period with a negative return. But again, I don't know if that's going to happen in the future. Maybe this next 4-year period or the following one after that is going to be different from the ones that we've experienced already. But let's take a look at this one without the loan. So you have a $10,000 purchase, no interest because you don't have any loan. You lose 28.81%. So you'd lose like 3, 4, 5% per year, which isn't too bad because if you just hold on, eventually you'll probably make that money back. To me, this isn't too bad because I'm still in the accumulation phase. I don't mind if Bitcoin's price falls. It would be smart to not have that loan though, because if you do have that loan, again, you'd be wiped out completely. You'd actually have a negative net worth because of that loan and because of the interest that you'd pay. Now let's take a look at an extremely bullish scenario. So you borrow $10,000, your bank gives you $10,000, you time this perfectly. You buy at $118,000, same terms, 10% interest rate, 4-year loan, and Bitcoin ends up going to $550,000 4 years from now. What would happen is your portfolio would be worth $93,220. It would go from $10,000 of your money plus $10,000 of the bank money to $93,000. Your loan would still be 14,641. The good thing here is that the bank will take the same amount no matter what. If your portfolio massively outperforms, you still owe the bank the exact same amount of money. Your bank doesn't care what you do with the money, they just want their money back plus interest. Your principal would have been $10,000. Your total return minus the principal and the loan would be $68,579.34. So your total return would be 685%. This is a 67% return per year, which is absolutely nuts. And I wouldn't be surprised if this happens because all it means is that the US dollar has lost a significant chunk of its value, and that can happen endlessly. The US dollar can lose 99%, then it can lose another 99%, then it can lose another 99%. There's no bottom to the US dollar's value. So Bitcoin's price can actually achieve this. And for all we know, maybe the next 4-year period is going to end up with Bitcoin being at this massive price that most people probably aren't expecting. In this last scenario, because you borrowed $10,000 and you bought Bitcoin with money that's not yours, you would have timed it perfectly. You would have seen Bitcoin go up 4 to 5 times and you would be able to pay back that loan. You would be getting the majority of the profits. But now, let's say if you don't borrow money, you just buy $10,000 worth of Bitcoin, your portfolio would be worth $46,000. Your total return would be 366%, and you would have seen a 47% annual return. So I think the main takeaway here should be that if you're going to borrow money to buy Bitcoin, it would probably be smarter to borrow money when Bitcoin's price is down. If you're expecting it to drop 60, 70, 80%, then it would probably be smarter to get it near the bottom. But unfortunately, it's extremely difficult to time the market, and you don't know if that will happen. What if it just keeps going up 60, 70%, then it drops 30%, kills all the momentum, and then it does it again, then it drops 30%, and then it goes up another 70% and drops another 30%, kills the momentum for retail. Retail never really FOMOs into Bitcoin, and then it doesn't have that blow off top that a lot of people are expecting. What if it just keeps going up, boring and consistent? In that case, you would do really, really well because you could either sell your Bitcoin at the end of that term to pay back your loan. You could pay the taxes on the capital gain on that Bitcoin, or you can pay back the loan using your income. If you pay it back over time, you'd pay less interest and you wouldn't have to deal with paying back the principal and the interest at some point in the future. One of the great things about the banking system is that they'll give you an unsecured loan for 7 to 10% using a personal line of credit, and you can then go and buy Bitcoin with it. And then you can pay back that loan over time whenever you need to. There's no liquidation. You just make the minimum payment over time, and the bank is happy with it. What you could do is you could use your income to pay back that loan, make the payments over 12, 24 months, and now you have no loan. You can borrow that money again to buy more Bitcoin. In the second scenario where the price goes from 118,000 to 84,000 or to any negative value, it would probably be a terrible decision to sell when Bitcoin's price is down. Sometimes people make emotional decisions with their finances and they pay for it over the long term. If this person sold at 84,000, they would have a 100% loss. But if they wait for Bitcoin's price to go to 100K, they would only be at a 76% loss. If Bitcoin's price goes to 180K, at some point it will, at some point it will, they would be back to a 58% return. If Bitcoin's price goes up 50% from the initial price they paid, they would have a great return. If you borrowed money and a bear market starts right after you borrowed it and you bought your Bitcoin, I wouldn't blame you if you want to sell your Bitcoin because you don't want it to go to a negative value. So let's say, for example, instead of $180,000, Bitcoin's price goes to $50,000. Your total return would be negative 161%. In this case, the maximum loss you could take would be your money plus your bank's money. So it'd be 20,000 plus the interest, which would be $4,641. So your initial plan to invest $10,000, then getting distracted by leverage, could lead you to have a negative $14,000 position at some point if Bitcoin goes to zero, which I think, of course, is highly, highly, highly unlikely at this point. But who knows? It could happen. We don't know. We still have to think about that possibility. I don't personally think it could happen, but if it does, I think other assets will be just as negatively impacted. If anything, that means that the internet is down and all of society has just collapsed. So if you sell your Bitcoin when it drops to 84,000, you would lose your initial investment plus a little bit of money on top of that. But if you wait and let's say Bitcoin actually goes to $1 million, like a lot of us expect, if you just have that patience, you would end up with a 1,500% return. So basically, leverage is a double edged sword. It can either hurt you really, really badly, or it can give you really, really great results that will probably change your life massively. If you borrow money to buy Bitcoin and the price goes up, it means that you basically increase your returns by a factor of however much money you borrowed as a percentage of your portfolio. If Bitcoin's price goes down, your loss is going to be more than the loss that other holders would face without debt. So if you take on a loan with that $10,000 principal of your own money with $10,000 that you borrowed, you would either double your returns or you would double your loss. You also have to consider interest. So your return may be slightly less than double and your loss will be slightly more than double.